Have you ever noticed that sometimes the exact price comes back to a line? This is not a coincidence. It is mathematics and technical tools behind it. Today I want to show you how to find these golden points by combining EMA, SMA, Heiken Ashi, and Fibonacci. Hello to all dear traders. Today we want to go to one of the most fascinating topics in the world of trading, namely scalping. Scalping, in simple terms, means taking very short and fast market movements. This style is suitable for those who like to open several trades in a short time and make small but numerous profits. But here is the important point. Many people enter scalping, and after a few days of losses, they get disappointed and say that this method does not work. The main reason is not using the right tools and not having a specific strategy. We are here today for exactly that. We are going to review a scalping strategy that combines 4 powerful tools: EMA 25, SMA 15, Heiken Ashi candles, and Fibonacci tools. This strategy is not too complicated to get confused, nor too simple to rely on luck. Rather, it is a balanced and practical combination. Introducing the tools EMA 25 and SMA 15 moving averages are one of the most basic tools of technical analysis. SMA 15 is the simple average of the last 15 candles. This line is more of a smoothing line and helps us see the overall trend. EMA 25, however, works differently. Because it gives more weight to new candles, it reacts faster than SMA. For scalping, reaction speed is very important, because we do not want to make decisions later than the market. So when EMA 25 is above SMA 15, it means we have a strong uptrend. When EMA 25 is below SMA 15, it means a stronger downtrend. Heiken Ashi candles. We often make mistakes in scalping because regular candles have a lot of noise. Heiken Ashi is here to solve this problem. When several green candles appear in a row, it means the uptrend is really gaining strength. When we see consecutive red candles, it means that the sellers have taken control. This helps us to be less involved in false signals. Fibonacci retracement. Fibonacci is one of the old tools that still works in modern markets, especially for scalpers. The 38.2%, 50%, and 61.8% levels are among the most important areas that the market reacts to again and again. When we scalp, these levels act as market retracements. That is, the price moves, then makes a short correction, hits these levels, and then continues in the direction of the trend again. Step 1. Checking the trend with EMA and SMA. The first thing we need to know is what trend the market is moving in. If the EMA 25 is above the SMA 15, it indicates that the uptrend is prevailing. If the EMA 25 is below the SMA 15, the downtrend is stronger. This overlap helps us to have an initial market filter. That is, we understand which direction the market is moving before we get excited and enter a trade. Step 2. Confirming the trend with Heiken Ashi. Now it's time to look at the Heiken Ashi candles. If the EMA and SMA confirm an uptrend, we should see at least 2 or 3 green Heiken Ashi candles in a row. This means that buyers are taking control of the market. Conversely, if the EMA and SMA indicate a downtrend, we should see red Heiken Ashi candles in a row. This stage makes us less susceptible to false signals. Many times the EMA and SMA cross, but the market immediately reverses. This is where the Heiken Ashi acts as an additional filter. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Step 3. Finding entry points with Fibonacci. This is where Fibonacci comes into play. Let's say the trend is up. The EMA and SMA are both confirming, and the Heiken Ashi candles are green. Should we go long right now? No. The best thing to do is wait for the market to make a small correction and then react at one of the important Fibonacci levels, such as 38.2% or 50%. If we are in an uptrend, we wait for the price to correct and hit one of these levels, Then when it starts to rise again, we go long. If we are in a downtrend, we wait for the market to turn up and hit one of the Fibonacci levels, such as 61.8% or 50%, then we go short. Step 4. Exit rules: take profit and stop loss. One of the biggest mistakes scalpers make is that they only focus on the entry point and don't think about the exit at all. But the truth is that the exit point is even more important than the entry point. Stop loss. For buying, the stop loss should be slightly lower than the EMA 25 or the last Fibonacci level. For selling, the stop loss is slightly higher than the EMA 25 or the Fibonacci level. Take profit. Here, the risk-reward ratio should be observed. Usually, the best case for scalping is 1-2 or 1-3. That is, if we risk $10, we should consider at least $10, $20, or $30 in profit. Step 5. Money management. No strategy works without money management. Do not involve more than 1-2% of your total capital in each trade. If you lose 3 trades in a row, stop trading that day. Always review the rules before entering and make sure that all conditions are met. Key points of the scalping strategy. One of the most important points in scalping is that you should never make a decision based on just one indicator. This strategy was created for exactly this reason: to combine several tools to filter out errors. 1. The role of moving averages, EMA 25 and SMA 15. EMA and SMA are the backbone of this strategy. When EMA 25 is above SMA 15, the uptrend is valid, and when it is the opposite, the downtrend is stronger. These crosses are considered the first entry or exit filter. 2. Confirmation with Heiken Ashi candles. Heiken Ashi helps us eliminate market noise. 2 or 3 consecutive green candles in an uptrend and red candles in a downtrend are a sign of the continuation of the market path. This step prevents us from entering the wrong positions. 3. Finding an entry point with Fibonacci. Fibonacci retracement plays the role of an accurate entry point. The 38.2%, 50%, and 61.8% levels are key points. Entering after the price hits these levels increases the probability of success. 4. Stop loss and take profit. The stop loss should be behind the EMA 25 or behind the Fibonacci level. The take profit is usually set with a risk-to-reward ratio of 1-2 or 1-3. Practical example. Let's look at a practical example together. Let's say we are on the time frame for Bitcoin. The EMA 25 is above the SMA 15. 3 consecutive green Heiken candles. The price has reached the 50% Fibonacci level after a correction and has started to grow again. This is exactly our entry point. We enter a buy trade. We place the stop loss behind the EMA 25, and the take profit is twice the distance from the stop loss. Now imagine the same scenario in reverse. The EMA 25 is below the SMA 15. The Heiken candles are red. The price has bounced back from the 61.8 Fibonacci level. This time we enter a sell trade. The stop loss is behind the EMA 25, and the take profit is twice the risk. So friends, this was a combined scalping strategy with EMA 25, SMA 2515, Heiken Ashi, and Fibonacci candles. This strategy is both simple and effective, but remember that no strategy works without money management. If you enjoyed this tutorial, please subscribe to the channel and ring the bell so you don't miss the next videos. Also, tell us in the comments what strategy you would like us to review in the next video.